We are covering the fundamentals of self-employment income, specifically how it's reported on Schedule C for sole proprietors and single-member LLCs. The exam requires you to master this because it's a foundational building block for individual taxation. Let's start with gross receipts. This is all income received in the course of your trade or business. An exam question might test you on non-cash income. For instance, if a freelance web developer creates a website for a lawyer in exchange for legal services valued at $2,000, that $2,000 must be included in the developer's gross receipts. The trap here is forgetting that bartered services are income at their fair market value. Gross receipts are the top line of Schedule C, the starting point before any deductions. From gross receipts, we subtract business expenses to arrive at net profit. The exam will test your understanding of what qualifies as a deductible expense using the ordinary and necessary standard. An ordinary expense is one that is common and accepted in your type of business. A necessary expense is one that is helpful and appropriate. For example, a roofer purchasing shingles is both ordinary and necessary. A roofer purchasing a luxury sports car is not, even if they put a logo on it. The exam loves to test the line between a current expense and a capital expenditure. A $500 repair to a business vehicle is a currently deductible repair expense. However, a $5,000 engine replacement that extends the vehicle's life is a capital expenditure that must be depreciated over several years, not deducted all at once. One of the most heavily tested areas is determining worker status, employee versus independent contractor. The IRS looks at the degree of control the business has over the worker. Remember this simple mental shortcut. Just ask yourself, who's the boss? If the business has the right to direct and control not only the result of the work, but also how the work is done, that person is an employee. Think about behavioral control, like requiring attendance at meetings or providing specific instructions on how to perform the task. Think about financial control, like providing the tools and equipment or paying a weekly salary. An independent contractor, by contrast, typically uses their own tools, sets their own hours, and is paid by the project. They can realize a profit or a loss. An exam question will give you a scenario, and you must weigh these control factors to determine the correct classification. The net profit calculated on Schedule C is not only subject to income tax, but also to self-employment tax, which is the sole proprietor's version of Social Security and Medicare taxes. The exam will expect you to know that this tax is calculated on Form SE. The starting point for the calculation is net earnings from self-employment, which is 92.35% of the Schedule C net profit. The most common exam trap related to this is the deduction for 1/2 of the self-employment tax paid. Test takers often mistakenly deduct this on Schedule C as a business expense. This is incorrect. The deduction for 1/2 of SE tax is an adjustment to income taken on Schedule 1 of Form 1040, an above-the-line deduction. It lowers your adjusted gross income, but it does not reduce your self-employment income for the purposes of calculating the SE tax itself. Understanding this distinction is critical for exam success.